Okay, so in this video, what we're going to cover is basically a couple concepts. Most of you have been struggling on performing in the markets despite the market environment being cooperative. So I'll be going over my positions plus a few thoughts that I have on what really it means if your focus is performance in the markets versus being a jack of all trades. So a trader that's focused on performance is basically going to do a few things. He's going to wait for his environment to show and wait for his edge to show in the markets. That sort of patience, that sort of, resolve to just sit there and wait and know that when your environment sort of comes back to the markets, and that is going to allow you to sort of achieve this sort of, the equity curve where you see a drawdown and then you recover, right? You see a drawdown and then you recover. You see a drawdown and then you recover, right? These are the phases when they know that they can perform best. And these are the phases, the drawdowns off the top is what they're trying to limit in the markets. So from a trader that's focused on performance is not focused on, he's only focused on one, is his edge present in the markets? If it's not, then usually those traders tend to wait because their only concern is if their equity curve, right? If their equity curve is rising, that's their only concern. The concern isn't that they're going to miss a breakout. Their concern isn't they have a level, everybody has a level of FOMO, but they're not concerned about missing the next 2, 3, 4 breakouts if that's what's needed for them to see their edge in the markets. On the other hand, what we have is folks that sort of want to be the jack of all trades, right? Those type of traders. Now, jack of all trade type of traders, one, they want to be part of the inflation trade. They want to be part of the gold trade. They want to be part of the steel trade. They want to be growth stock traders. They want to be value investors. They want to do all of this in every phase of the market, right? There are phases when growth is not working. There are phases when value is working. There are only phases when gold is working and everything else isn't working. So those type of traders, what they know, what they try to do is sort of be in all of these, and their objective in the market is to only be right for every single twist and turn, whereas the performers in the market are waiting for their edge to show. So if the goal is to compound your returns, if the goal is to see a rising, let's call it EC equity curve, then you wait for your environment to show, and you wait and wait and wait and wait some more so that you see drawdowns, but you recover quickly, because as soon as your edge shows, you start compounding, right? You try to limit these phases, and these do happen. Every trader goes through them, but it's the ability to recover when the environment changes. What I've seen recently is many traders, not just 2021, since Feb to April or Feb to May, but what they tend to do is they focus on all these other trades, and when it's time to really step into the growth space, they just don't see it, right? They're too busy in steel. They're too busy. Those are your Levi jeans, your golf. These are your ELY type of names. These names generally and historically don't lead a market, or depending on what your goal is, they might be good investments from 8 to 10 to 15 year horizons, or even 5 years, But if that's your goal, then you go for these plus the dividend that they give you, right? But if your goal is not that, and your goal is to compound your money, right? To be a performer in the markets, is when you see the environment, you want to compound your gains as quickly as you can. That's what our focus is at TL, right? To wait for those environments to show, so that when they do show up, you press the gas and you perform better. Be very clear on what you want to be. If you want to be an investor and you're looking for low beta names like AKAM, Levi, Golf, ELY, and things of that nature, all the power to you. That is sort of an investment. That's not trading, right? You're not going to be taking a lot of risk, so you're not going to be compounding a lot of what you're doing. Your time horizons in this is 5 to 8 to 10 years, whereas when you're trading, you want to execute your edge when it's present again and again and again and again in the markets, right? So that's a little bit, I really wanted to cover this. Know what your goal is, and you have to wait for, you try to be an expert at one thing. If you try to be an expert at everything, you're not really going to be you're not really going to be good at anything. You're going to be decent at everything. So that's out of the way. I'm going to start at a few things. We'll go to the TL portfolio update. And I'll show you guys, when I sort of started increasing exposure. We'll go through every single position and the rationale for each position one by one, and the winning characteristics associated with the position, the thought process to get into that position, the whys of that position, and sort of this is going to be a deep dive into the concepts, into the execution, into the position sizing plan, and all of that goes into sort of leading you to be in these sort of names, right? So this is not going to be your fast food restaurant, fast food drive-through type of video. If you want to watch it at 2 times, go ahead and do that. If you want to watch it in different days, a portion of it each day, then go ahead and do that. So let's get started. So first up, let's start with RBLX. So let's start with RBLX. That was one on. So actually, let's go back and start with for one of the first positions that I took right around that May 24 mark, I believe, was TQQQ, and the reason I did that was the fact that not many other positions in the market, right? This year, May 25 portfolio update. There were not many other positions, to be taken in the market because I didn't see the setups or wasn't as confident in the environment improving as much as it has in the past 10 days. So the idea here was with TQQQ was we reclaimed the bolded pivot on the daily plan. So let's go to the daily plan and you click latest. So Twitter seems to only go back a few days, but once we reclaim a bolded pivot on a daily plan, the idea is to know that the market environment, the M factor, is going to be there now, right? And once the M factor is there, you want some sort of long exposure so that your portfolio can make progress in the markets, in the general markets, right? That's sort of the goal. So this was one of the first positions that I put on as soon as we reclaimed that pivot, bolded pivot. I saw that Qs were outperforming as we reclaimed the bolded pivot, and I put a position on in TQQQ, and it happened to work well, and I actually sold it today because the indexes aren't performing as well as the stocks are performing. So I wanted to put my capital back into stocks and sort of get away from the index driven position. That was the thesis for this, or the rationale for this, right? As we reclaim the bullet pivot, the NASDAQ, again, as we reclaim the bullet pivot, the NASDAQ was the one that was outperforming. And that was a rationale behind putting on TQQQ as one of the first positions, from cash to first position. The second one, let's go over Crowd. So the rationale here was a few things. So when the market was pulling in off of the highs, this started to exhibit some RS. Crowd itself started to exhibit some RS, higher lows. The RS line was rising. There was group RS as well, right? There was group RS as well. So the fact that, Crowd trades in the software group, and I think we reclaim the bullet pivot level one of these days. I put on a position in TQQQ as one of my first ones because I couldn't see setups that were overwhelmingly obvious to me. The second position might have been another one, but let's just say was Crowd. And the reason for that would be the group was showing RS, the software group was showing RS, and it reclaims its KMAs on this particular day. So that's when I put on this position. So we're forming when the KMAs bunch up, in this area, we call this some sort of launching pad, right? When the KMAs bunch up, and I initiated a position mostly because, now let's list out the edges, right, day to day. So one was group RS, which was the most obvious one. We reclaimed the bullet pivot level. The software group as a whole was acting pretty well on the most recent drawdown. The Qs were acting well, right? So that was one of the edges. The second one, this is a former leadership stock, clearly. It has and knows how to run in a very big way from cycle to cycle, and it's been a proven winner. So it's not really an edge, but more so just something to notice. This is a name, I've traded before, I made money on before. It has a good story behind it. It's one of the growths or one of the leaders in that particular group as well. So group RS. The second one is the KMAs bunch up, right? And we call that the launching pad. So those were basically the two edges and the reason for this particular position being put on. And this was over a matter of days, right? I particularly don't feel comfortable positioning below the KMAs, and no launch pad here, nothing to see here, right? Maybe at this point started to shape up, was watching it, but sort of fell over. I couldn't really figure out a position to put on in this space. And now we see this launch pad. Now this is still fairly early, could easily come in one of these days. And you figure it out day to day. But that was sort of the recipe on this particular name. Let's go to RBLX. I think that one's a really good one to cover. So RBLX has a few things that I want to go over. So one of the first characteristics that stood out to me was this particular candle. This was the highest volume since IPO since IPO week with a earnings catalyst, right? Had a high closing range. So high DCR. And from this point on, we were sort of watching for tightening action to see what it does from this point on. So again, let's list out, this is what I'm doing on a nightly basis. One, what are the edges on the chart? So if this is a chart that I'm interested in, what are the edges at play? Now the number of edges determine the other question that I've been getting often is determine the position size, right? And then your position size is dependent on max portfolio allocation. Personally, I try to keep it around that 18% as a max position size per name. That's just my personal risk tolerance in the markets, right? So market goes off of its highs. It's clearly showing RS. Market goes off of its highs, clearly showing RS, right? These are RS days. It's outperforming the markets on those days. So the first edge is high volume, HV, highest volume since IPO week with earnings catalyst. That's our first edge on this particular chart. And these are all happening before it makes a run, right? That's what's important. The second one, so this is with high DCR, which is daily closing range. After that, we see it's exhibiting RS, and all of this happens. I'm not sure if I'm lining it up exactly, but it happens before this move up, right? So it has RS days and RS line near new highs. The third thing that I see on this particular chart, it's a very liquid name, right? It's 150 million volume on its IPO week. And that's substantial volume. That's institutional volume on this particular name. So the third thing is it's just a fairly liquid name, and liquid names tend to be or have the potential to be leaders in the market if they want to be. That's just the more liquid it is, the higher dollar volume it trades, right? And the higher dollar volume it trades, the higher probability that many institutions want to be in this particular name. And the fact that many institutions want to be in this particular name tells me that it can be a candidate for leadership if and when it shapes up from its IPO week, right? So all of these edges, so this is one edge, this is a second edge, and this is just a characteristic or something that's not really an edge, it's just an observation, right? Has leadership potential given the high dollar volume on this particular name. So the way I go about building a position sizing plan, right? The way I go about building a position sizing plan is, has this characteristic maybe money in the past? And I sort of gauge it versus, a grade out of 18, how many percentage points or how much of my portfolio can I really put? So if I say, for example, let's just say this is 7%, 5%, and 3%, that sort of gives me a number of 15% of my portfolio. So if 15% of my portfolio, I'm allowed to place into this name. So if I put 15% here, right? Based on the edges, the collective edges, you could come up with this number. And now you have to fine tune this. Don't use 7, 5, and 3 on every single name, or don't use 7, 5, and 3 just because I said so. You have to work. It has to be you have to internalize this concept of listing your edges and doing this consistently and seeing which ones work more often than the others, and you size them accordingly to sort of give it a grade out of that max position size in your portfolio. Now this is all this. So one is knowing your edge in the market. If you don't know, or if you don't have an edge in your market, you're really not allowed to execute anything, right? In the markets, because if you don't have an edge, then what are you going around executing anyways? The second is having a plan, which includes the daily routine or the weekly or the weekend routine, right? If you don't have a consistent routine, or if you're not consistent in the ways you're tracking stocks or scanning stocks or building a plan on a nightly or a weekly basis, you're basically setting yourself up for inconsistent success, and inconsistent success is failure ultimately. So at the end of the day, what that means is if you're not consistent in your ways in anything that you're doing in the markets, you're not going to succeed consistently. If you're not succeeding consistently, it means you're going to fail. And then comes execution. That's the really first, or the last step in this whole process to even allow you to be, or allow you to have these sort of names in your universe, right? So that's sort of how I go from, edges leading to position size, right? Given a grade out of max allocation percentage. And now you have to figure out the entry, the exit, and the risk, which is your stop, right? You're going to risk, how much are you going to risk, which is your out of 18. Your exit is basically where are you going to be stopped out, or where are you going to be wrong on this particular trade, and what is your entry going to be? That's a separate thing. That's your execution part. But if you don't study your edges in the market and you don't know them, right, then you don't know what you're even looking for in the markets, or you're not leveraging what the market structure is, or you're not leveraging a consistent edge, right? And you won't be in the right stocks or the right universe to sort of give you that performance. The second one is to plan on a daily or a weekly basis, given whatever it is that you do, whatever your objective is, whatever your lifestyle allows you to do, whatever it is, you just have to do it consistently, regardless of if money is being made or if no money is being made in the markets. So a lot of traders that I have mentored over the years, and this cycle is no different, unfortunately, is after that Feb timeframe, they just give up doing the daily routine. They give up doing the weekend routine. They don't see value in it because they're not making money. And that sort of mindset is a losing mindset. It's not going to lead to consistent success in the markets. So with anything, you have to be consistent in the way you're doing it, or you're going to see inconsistent success. So it's as simple really as that. The third, so that again, this sort of as a whole leads to this even being on the radar, right? That's sort of the first step to sort of have it on the radar. Now, in terms of execution, let's talk about that a little bit. So the execution on this particular name, after I saw, I was fairly late on it, the 8205 mark, and I was trying to execute basically versus this close after I missed an entry on this name at or about $80 to begin with. Could have easily started executing on this day versus the 70 mark, right? But it is what it is. It sort of starts working, and at this point, when it was trading and over here on this particular day, and I believe it was a Friday, it put me in a position where I had to buy a stock because it had so many characteristics. It had what I look for in the market. It had my edge on the chart, and I had to put on a position if I want to be in a stock that's going to perform in the markets. So started position at around that 82 area. The plan was to sort of manage it versus 80, see what it does versus 80, and things of that nature. And it just so happens the very next day, it works out really, really well, right? In the wick, up and out. And now where the mindset is, where's the 10 DMA, where's the 21 DMA, where's the 23 EMA, and things of that nature, to see if I could be in this a little bit more long term. But all of that homework to even have this, so the RS days happened in this area, right? And one of the other edges that I actually didn't highlight was the fact that the IBT markets were also active on this particular name. That was a fourth edge on this. So this edge basically tells us that when we see large block trade transactions in the market, what this tells us is there is either going to be large directional movement up or large directional movement down on this particular name. That's what the IBT edge tells us. And this is part of the TL money flow service, right? Now, the fact that we saw RS days in this area, which was one. The second thing was the high volume on the earnings with high daily closing range. The third was IBT. The fourth was the liquidity. And this name having a leadership status because of the IPO week volume being 150 million, right? And there's RS in this particular area. Now it busts up and out, makes you chase, and then it does this. This sort of recipe is seen again and again and again in leadership stocks, right? In leadership stocks. So what you're doing is basically you're spotting your edge in the markets. You're leveraging that edge again and again to sort of perform in the markets. So now the question is that ELY or golf, right? Are these sort of names going to give you a similar performance if that's your goal in the markets? I highly doubt it, right? These sort of names have, $1 million gap up is a very low dollar volume gap up. Usually, likely just one or a couple of institutions can make this happen, right? So it all goes back to what do you want to own as your goal to be in. This is working for now, so I'll just be a jack of all trades and then position in a name that really has no potential or no signs of leadership status behind it, right? Or are you going to wait for something like this to sort of show up? High dollar volume can have a liquid leader and can really be one of those that can have that leadership status in the markets. So we'll keep going on to the next one. So we covered TQQQ, Crowd, RBLX, and now we're going to go over DDD. So the next one that we're going to cover here is DDD. We want to go over a few things on this particular chart. So again, big volume, clearly, 160, 140, whatever the case might be. Institutions showing up on the chart, rallies. Now start seeing a haircut, right? The depth is greater than 50% on this particular name. And again, we see this bar show up. This was the highest volume since the last earnings cycle. This is 60 million. This was with a earnings catalyst and a high daily closing range. So whatever it is at this point and on, the story has changed, right? Price is saying, the volume is saying that, the price is saying that, so there were nobody to sort of be arguing. So even though the depth of this, and a lot of traders get caught, the depth of this is too much and I'm not going to do it, anything with it doesn't matter until it gets to 56. And it's not really how I view the markets. Even though the depth of this is greater than 50%, given the fact that we see this volume, everything sort of resets for me. In my point of view and what I've studied and seen in the markets, everything resets at this point because of this volume, right? Price and volume tell the best story. And this 50% depth is sort of negated at this particular point. So this one, I had an entry through that 25. It's attempted 25, failed, attempted 25, failed, attempted 25, failed, and then it opened on this particular day in the wick and out once again, and then it rallies. This particular trade netted 19% in about 3 to 4 days. And what were the edges? So let's go over the edges. The first edge was high volume with earnings and high DCR on earnings day, right? The second one was this particular name exhibited RS post earnings, so it went down, market down, rising RS line, market down. There were RS days in this area. Second edge is RS days. We keep this on the TL gappers watch list, given the fact that it has this sort of volume associated with it, which is the highest since the last cycle, right? So makes the TL gappers watch list, and these are the edges that are on it. And the third one was the IOF market was active, which was really sort of opened my eyes to this sort of, being a potential, what the IOF market, pulling up a chart real quick, is basically puts a timer on a stock to start performing now, right? Because the options market is basically a timer. And that's one of the edges, is post earnings, right? Post earnings. So this is the gap up on earnings. And then this is the volume that it saw on the IOF market. So that sort of added to my conviction, was that, it saw the highest IOF. It's really never seen that before. So that was the third edge on this particular name. Again, it sort of now sounds repetitive, right? So these are the same edges. High volume earnings catalyst, even though depth was greater than 50%, doesn't matter. The second one was RS, and then the third one was IOF, and that's a recipe of something that's going to perform for you or work for you, and you don't have to work for it, right? This one I happened to sell through the 30, down through the 30, and I took a plus 19% gain and sort of moved on. Now in hindsight, it sort of looks like it's the wrong move, but it is, sort of what it is. I don't really dwell on it. I basically cycled into better names and rolled my capital into better names that have also been performing, right? So I'm not really bummed about seeing a plus 11% here today. At some point, it's going to consolidate maybe through, above that $30 mark, and maybe allows me to enter once again once it squares up. If not, that's fine. If it does that, awesome. So that's sort of the recipe for this one. Again, it's sort of the same thing. The important point here is the plus 50% depth is negated by this particular volume candle. So that's sort of, we've gone over TQQQ, Crowd, RBLX, and DDD, and that was sort of the thesis on these, and we're about at May 25 now. So I started increasing exposure now June 1st, right, or May 27. I added a few more names in SAVA, LFMD, HYRE, TIGR. Again, I'll go over these particular names again. TIGR, highest daily volume ever, highest volume ever, HVE, right? With a positive close. And we made an exception here, even though the daily closing range was less than 50%. We set that sales estimates on this particular name were triple digits, and they reported triple digit earnings. And it sort of looked like the street was caught off guard because a lot of institutions, well, this volume sort of says there was some sort of institutional action because it's never seen 30 million shares in a single day on this particular name. So at this point, it moved up above 20, back below, and I was sort of going to start tracking it at the $20 mark. But the important thing is to even get this in the universe, we put this on the TL Gappers watch list and we start tracking it, right? So these key watch lists that we track, which is the Gappers, which is the HDF, which is the IPO, right? These three particular watch lists, they will put you in stocks or put you in a position. They put you in a position, right? So these particular watch lists, they put you in a position to sort of be in those winning stocks and see what they, be, or at least have a universe of stocks that allow you to position, in something like a CELH that moved up and out today, right? Or LFMD, which was up 12%, or DDD again, which was up 11%, or UPSD, SPCE, whatever the case might be. What these watch lists, the Gappers watch list, the IPO watch list, the HDF watch list, these are designed, the whole system is designed for performance. So as much as it's hard to listen or pay attention to all these different systems, what we do at TL is basically under the private access hat. That whole system of keeping updated watch lists, moving everything from here down to the focus list, looping it, putting SAVA from the HDF watch list down to the focus list. That's all. There's a method to that madness. So let's just keep going here. So TIGR, highest daily volume, that was a reason for this particular position being put on. Was tracking it versus 20, goes up above 20. Now this one's still shaping up in that 20-25 box. It will see what it sort of does the next few sessions. The other one, again, I'm going to quickly cover these now. HYRE, what's the characteristic on this one? Highest daily volume ever with the earnings catalyst and a high daily closing range. Same thing. It's the same recipe, just a different stock, right? Market moves off highs, it's showing RS. Market moves off highs, showing RS. At that point, it's screaming. I picked a spot at 15, happened to work, right? In the wick of this particular day, up and out. So attempt at 15 failed, and I wanted to see what the next reaction was to 15. Goes up and out, holds, washes me out, and I took, I think, plus 9% on that trade. And then reposition on this particular day back up through 15 because it has a tendency to give up the gains for a few days and then rally right back up. Knowing the character at this point, right now I sort of wanted to firm up and see if we could build a pivot versus the $18 mark. So again, the same characteristic, highest daily volume ever, high daily closing range with the earnings catalyst. We put it on the TL Gappers watch list. It's showing RS. You list out your edges, right? You list out your edges. You build a position sizing plan, right? According to your max size, right? Which might be 18%. Could be different. Depends on where you are in your journey. And you do that, right? You have the edge, you have the daily routine that I still see, there's about 500 of you, but no, we push you to do this because we see traders that do this, see consistent success, which makes sense that the majority fail and the majority don't want to do this. And the third is the execution part, which is really figuring out the entry on the chart, right? Many traders don't want to do the first two, but they want to just know the last one. It doesn't really work that way. So that was HYRE. So May 27, a TIGR, HYRE. Now Dash is the same thing. I did a 2-minute video on that. So let's quickly cover that one as well. Again, it's fairly similar stuff. It's this particular candle is your lockup expiration, and lockup expirations always see high volume. So I don't really see this as the highest volume since the IPO day, because this characteristic, any stock in the market that has a lockup does see high volume. So that's not really an edge, right? So not all volumes created equal. You need to see where the volume is coming from and sort of dictate or see that and sort of interpret it. It's not blue is good and pink is bad, right? This particular candle was with the earnings catalyst. This is the volume, this is high volume, or the highest volume since IPO. It's the highest volume since IPO. That's how it gets on the TL gappers or the TL IPO watch list in this case, because it's a fairly young stock still. And now this is a characteristic that's a winning characteristic. This is a winning. If you aren't positioning in stocks that have winning characteristics, what is it that you're doing, right? What is it that what's your edge in the market if it's not the ones that exhibit the winning characteristics? What's the point? Or what's your edge? Whatever you do has to associate with it. Whatever actions you take in the markets, they have to associate with an edge. They can't be random. As soon as we try to trade in a random way, we see random results, and random results means failure in the long term. So highest volume since IPO. Again, this one held 130, then held 135. I sort of bought into the 140. At this particular day, I remember where the market closed at lows and it held the 135 mark. So I started tracking at 135. Saw positive. And then this particular down day was on below average volume. Below average, decreasing volume on a down day. That's constructive price action, and it held the 135 mark. So I started tracking it versus that 135. And you could do this end of day basis. It doesn't have to be intraday, right? As long as you do the daily routine and you go through the watch list, you go through the key watch list, and you see this sort of action for yourself, right? Again, our service is tailored towards building you as a trader and showing you the tips and tricks of how to actually get it done. It's not, we're going to call it out intraday. You're going to go buy it having no clue why it's moving up. We tell you to sell it at 150 and you guys think we're great. That doesn't work in the long term. It might work in a cooperative market. It might work for a few days to weeks, but in the long run, it's going to result in you losing money, because if I see something that changes, I'll be the first one to act and sort of switch stance on the position, right? So we want to teach you how to interpret the action itself. So this one happened to move up and out. Now, it's consolidating, maybe comes back, maybe doesn't, right? Whatever the case might be, it's sort of now managing the position versus the cost basis. But the important key takeaway here, again, when you're doing, what are the edges at play? RS days. There were RS days in this area. Market moves down, market moves down. The RS line's holding. There was highest volume since IPO day with the earnings catalyst and a high daily closing range. Again, it's the same recipe. RS days, highest volume ever since IPO, since last earnings cycle, highest daily volume ever. All of those are just winning characteristics, and you're piling them on to sort of be in the stocks that exhibit these actions so that you can win in the markets, right? You could at least position yourself in a name that does well on a, or has the potential to do well, because these winning characteristics show up on such stocks. So this particular action reminded me of Roku, because I know Roku did a fairly similar thing. It died completely, and then it got sort of like the stocks revived on earnings with this sort of action, and we see highest. So this reminded me of a Roku. If you go back to our OKU chart, right, you'll see that for yourself, and that comes with studying the markets. I don't dream about this stuff, so you have to study your edges. You have to do a lot of chart work to sort of see this. So that is pretty much it. There's a 2-minute video on SE. Let's quickly cover how you get to 2-minute videos. You click TL 2 minutes and you'll see all of these videos. You can click videos and you'll see all of these videos. I highly encourage you to watch each of them. They cover different concepts. If you click TL 2 minutes top, you'll see 1, 2, 3, 4 videos that you could go over, and I highly recommend that you do that. Again, let's sort of wrap this up with know what your goal is in the markets, right? Know what your goal is in the markets. If you don't know what your goal is, if you're suffering from this FOMO that Levi jeans and Crocs and Eli and golf, all these secondary seasonality, I don't even know what to call them, type of names are going to lead the market, then you have not studied the market enough. And to perform in the markets, you have to have, again, like we said, edges that you've studied. You know that these characteristics are going to show up in winning stocks, and you wait for these characteristics to show up, and then you position them. Then the amount of FOMO is sort of reduced at that point. It's not eliminated. You can't eliminate FOMO, but it's reduced because you know stocks are winning stocks are start, when things and the environment gets really, really, really good, you'll see these performers show up with volume, with earnings, with future estimates. So that's sort of our focus in the markets. We're not trying to be jack of all trades at TL. So I highly recommend you guys evaluate what your goals are, align your trading with your goals. So if you're in a AKAM, it's a really low beta name, has no winning characteristics. If you're in a ELY, are you an investor? Are you a trader? Whatever you want to be, make sure what your actions align with what you're doing. So sort of leave it at that. We might have a weekend webinar where you guys get to ask questions, and I think it's important to get on the same page as some of you guys to sort of, this is a market to be performing. The breadth is incredible. Things are moving. There's a lot of, leverage that you can put on and make sort of big progress during these times after sitting since Feb all the way to and totally like the end of May, right? So ask questions. Can't emphasize that enough. If you're confused, ask questions. That's the best way to go about it. This is a place to learn. There are no stock picks, stock alerts, stock something. There's no silver spoon. There's a plan that's put in place every morning, and we go sort of out and execute that plan on a day-to-day basis. So I'll leave it at that. I think it's getting a little bit lengthy. So it's about 50 minutes now. So we'll see what follow-up questions that you have. Feel free to, you know, post the daily routine. So let's just plug this. Post the daily routine, right? I want to see these so that we can interact. Right? We could sort of, the idea is to push you as a trader to be better and perform in the markets. The idea is not to be mediocre, right? If the goal was to be mediocre, there's no point in doing that. So there are ways to do this without being, you know, having a job is not an excuse, or whatever the case might be, a distraction. If you have a consistent daily routine that you spend, you know, even 45 minutes, it's doable. It's a matter of, you know, asking the right questions, knowing if you want to be a performer or you want to be a jack of all trades where you just focused on being right rather than performing in the markets. So I'll leave it at that rather than rambling on. And I hope this was really useful for you to get into the right mindset of what your goal is in the markets, and what, you know, what your edges are, how you should position size, what your max risk tolerance is, and how those things all play into getting into, you know, multiple names that are performing, right? So multiple names that are performing well, and you're compounding your gains, and the market's really, the breadth's picked up, and you're performing with the markets earlier than many would be out there. So there's the method to the madness. Again, I had a question if this is a paper trading portfolio. This is real money. This is a screenshot right from Interactive Brokers. There's no way I could go to doctor this. I don't have enough time to be doing that. This is real money, real positions, real entry areas. And I do these on an end-of-day basis. So ask questions, question my entries. Why are you doing this? Why are you doing that? These are really for you to leverage. You know, if I'm increasing exposure from May 25, right, area, or May 24 area, question my entries, ask me why am I doing what I'm doing? What's the reason, right? Because I don't like losing money as much as, you know, if I see an opportunity to compound my gains, I do that. And it's up to you to sort of leverage that experience, that know-how, that knowledge, and sort of learn that, absorb that, so that you could do it on your own. So if you're not seeing the same progress as me, question the methods, learn about them. What are you doing, Ray? Why are you doing this? What are the edges at play? What's the rationale behind it, right? That's how you'll get better. So we'll leave it at that. I think this is pushing a little bit past the 50-minute mark. So I'll see you guys either in the weekend webinar this weekend. I think we will do a Q&A once again. And I look forward to taking your questions. Thank you.